Phil Grandy, philsgang.com. Welcome to my YouTube channel. During my presentation, please hit subscribe, like, and share. I'd really appreciate it. Okay, so yesterday on October 13th, 2022, we had a violent rally. But remember, we also had a violent rally on Monday and Tuesday where the market went up 1,500 points and gave it all back. And this is going to give it back too, but there's a difference with this rally. If you look on my chart, the last time we had earnings, we had this rally right here. See it? We had this rally right here. And then it gave it all back. Now, again, if it holds true that during the earnings season, they always start out with the banks like today, and they always rig the bank numbers because they can, and they can do it legally. So they're always beating their estimates, and it looks like they're always having good profits. I'm talking about the major banks because they can take the money from their set aside for bad loans and move it to the bottom line. So if they really only made $2 million, they can take another $3 million from the reserves, shift it over to the bottom line, say they made $5 million. So that's how they get earnings seasons to kick off, and why the earnings season always rallies, and why during the earnings season, I always tell my members we never buy into earnings season individual stocks, but we do buy the spiders, okay, because, again, of what I just said. And the spiders move slowly, and it's really not a lot of risk, and especially if you put a stop in. But let me finish what's going on. We're going to have, I think, just another rally, and it'll fail again. Now, why will it fail again? Just like the 1,500 point fail again? Because the bottom's not in. And this week here, I told my members, and I told them for the last 2 weeks, that I thought this was going to come down and hold right in this area right here. See it? This is the top of the 2020 right here, crash right there. Okay. So in fact, I told them it also could top out. This rally could stop, or the fall could stop. Let me just get it for you right here. The fall could also stop a little bit higher right in here. That's another little support area right there. But we're in that area right now where it made sense that we're going to have this snap back, okay? But the problem is they're not going to hold. And the reason they don't hold is because we're in a severe downtrend. And when you're in a severe downtrend and you don't have QE on your side, it's over. Remember, after this crash, we had this big rally because we had QE, putting in trillions and trillions of dollars to push the stock market up. Our 2018 crash, the last month of December, which I predicted in January 2018 would be the start of all these crashes, it went up as well because they did QE. They always, every time we retreat, they do another QE to move the market up by moving the Fed fund rates to zero. Let's talk about the Fed fund rates for a moment. The reason the reason that the market can't rally because it's lacking QE, which was back here, had QE. This had QE. Okay, in fact, from 2008 all the way up to here was all QE. It's over. They don't do it anymore. That's the struggle. But let's talk about this bottom that everybody's going to be in. The bottom, okay, we're not going to have a bottom unless Powell has the courage to stop spending. You got to stop the spending. The only way you're going to stop the spending is to move our Fed fund rate up. That's the rate in which the banks charge other banks, okay, interest rate. They loan the money, and then your bank, again, adjusts it and charges you an interest rate. Unless they move those rates up. I'm not talking about from 250 to 350. I'm talking about from 250, 2.5% up to 9% or 10%. Because the problem is when they keep raising rates like Powell's doing to fight inflation, it has no effect on inflation for 12 to 18 months. That's right. It takes 12 to 18 months for a rate hike to have an influence on the inflation. So during that time, Powell's keeping the Fed fund rates low enough so people keep spending. That's the biggest problem we got. See, Volcker, he was smart. He knew that it takes 18 months, 12 months to have an influence on the inflation. So he moved rates from, get this, Fed fund rates from 0.5% to 19%. He broke the back of inflation. At the same time, yes, you put the economy in a recession, but sometimes, not sometimes, all the time recessions are good from the point of view. When you go into recession, corporations get rid of all their bad debt. They get rid of all their spending. They start rolling, bringing in spending. They make new budgets. So when you come out of that recession, you take off big time. But that's not what's going on. So until until Powell gets some courage. And here's the other thing that Powell did. During the pandemic from 2020 to 2021, remember, we had inflation going then. And Powell turns around, what does he do? He keeps interest rates low when people were buying houses. You remember that? Houses were going through the roof. House prices went up 20, 30% in some places during the pandemic when inflation was going up because people were getting out of the city and going to the suburbs. But Powell was keeping interest rates low, so people were taking advantage to go buy housing. That created a whole hell of a lot of inflation. He was responsible for the housing inflation. Volcker would have never done that. He would have stopped that spending. And now we are paying for that spending. And unfortunately, the people who bought homes, since then, 2020, 2021, are now suffering. So, again, people believe that inflation just started during the pandemic. It didn't. It started in 2008 with the $3 trillion they printed for QE1, QE2, the twist, and 3. And then there was more inflation during the pandemic, and Powell doesn't stop the spending. Why? Just like they rigged the market yesterday, because we're going into an election year. And Biden is telling them, we got to get people keep spending. Got to keep spending because we need good numbers going into the election. So we're not going to have a bottom until that occurs. And when does that occur? When we get a capitulation. What's that? When all of a sudden your computers start shaking and the market, all of a sudden just has a big crash. That's when we hit 40% on the VIX index. When you hit 40%, panic sets in, and then panic just takes off, and the market just goes down. So we're far from a bottom. I could give you so many reasons why we're not in a bottom, but I don't have time right now. So today the banks are reporting, and they're going to try to rally the market off the banks, just like they did the last time right here, okay? But remember, you're still in a downtrend. You just don't get out of downtrends. It doesn't happen. It's really difficult. I'm so sick of hearing them say everything's a bottom. It's not. You know when the bottom is in, we'll have a capitulation. We haven't had that yet. We haven't had that. So please be very careful. And as I said to you, if you ever want to know what's going on in the market, what's the market going to do, go to my YouTube channel right here, because I always tell you it's free. Don't cost you a penny. But if you want to know what stocks you should be in, not just the individual stocks, but what groups you should be in. Should you be in cyclicals? Should you be in banks? Join my gang. You get free membership for 10 days. Check it out. philsgang.com, okay? And just go sign up with the Working Investors where it says get started. All right, I'll see you on the charts.